certainly the trade war is a big factor at play. But the other element to consider also is where we are in the cycle. So there's a couple of things that we like to look at around the asset classes. So one of them is the spread between, say, high yield and high grade. The wider the spread, the more risk aversion. Right. The narrower the spread, better. Well, we've widened recently back to where we were in the 2013 to 2015 level, which is around the time in which the cycle was deteriorating. At that time, the multiples don't go anywhere. We're looking for earnings, to come through, and eventually, actually, the market went down before it went higher. So I think the risk aversion in the bond markets are telling us what's the cycle, it's still coming down. Of course, the trade war will impact the cycle. And the other element, of course, is, and you're probably going to ask, should we be buying the dip, as you were sort of alluding to a little bit earlier on. So one thing we like to look at is small caps. So small caps in the Asian region have underperformed significantly. The level of underperformance is similar to what you saw in the GFC and post the Asian crisis. So you'd have thought this is the buying opportunity. But valuations haven't come down yet to the level that want us to really dip our toes in aggressively. And then the other element, of course, is the earnings. And the earnings, we still see more earnings downgrades rather than upgrades. And that, I think, keeps us a bit more cautious.
When you look at the small caps, I wonder too, because this is an area that tends to be more domestically focused in some cases, does this suggest that this is an area that is less vulnerable, if you will, to ongoing trade tensions?
Well, it's interesting you said that. It may not be, right? Because that's where the tariffs become a little bit more complex. So we think a lot about sort of first order and second order impacts of the trade war. So one of the big questions is, earlier this year we had steel tariffs, and actually Indonesia imports of Chinese steel is up 50% year on year. So the question is, as we go into the next few months, if these tariffs are put in place, are we going to see Chinese goods diverted to ASEAN? Now, if that happens, that's more deflationary in ASEAN, especially for earnings. And for small and mid-cap companies, it's a squeeze on margins.
Very interesting.
Sadiq, we're seeing so much noise surrounding the midterm elections in the United States, and certainly President Trump has again and again pushed on China and said, that this is the only way forward in terms of the U.S.-China trade spent. That basically the rhetoric is something that he is using to get his way. But then when you take a step back and look at what the Chinese have done in the last couple of months, they put in new regulations on the financial sector. They seem to be, at least in voice, if not in action, trying to clean up their act in terms of transparency. Is this kind of attitude from the United States actually working, at least in the short term?
I mean, in terms of the economic data, you've already kind of seen the softness come through, right? And maybe the sort of the loading up of exports before some of these tariffs come through. I think the sort of Mike Pence's speech about a month ago, I think, put a certain level of discourse, which I think has certainly made some of the lines perhaps a little bit clearer from a longer-term perspective as opposed to a near-term perspective. I mean, I think, to your point about the midterm elections, it will be fascinating to see, right? Usually when you have a split government in terms of president one party, Congress the other party, it tends to be relatively positive for markets. And that may be because on the domestic side, things might become a bit more predictable. But I think you're right that on the international side, we still have this back and forth, and it's unclear how it's going to settle. And I'm not sure the midterms will settle that international element. And to your point, I mean, our base case is still that we will start to see more trade frictions. And those frictions will translate into more earnings downgrades and more growth downgrades.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.